Ladies and gentlemen, welcome back to the channel where we expose the truth about what's really happening in the precious metals market. Today, December 13th, 2025, we are witnessing history unfold right before our eyes. Silver has absolutely exploded this week, smashing through to a new all-time high of over 64.66 per ounce before pulling back slightly to around 62s amid some profit taking. But make no mistake, this is not just another rally, this is the breaking point. The banks' decades-long grip on silver prices is slipping, and the chaos on the COMEX is proof that their final desperate attempts to suppress the price have utterly failed. For years, we've been talking about how bullion banks like JP Morgan have been manipulating the silver market through massive paper short positions, spoofing, and naked shorts on the futures exchange. They've capped rallies, slammed prices down during key moments, and kept physical silver artificially cheap while hoarding billions of ounces behind the scenes. But this week, everything changed. Silver surged past $60, then $62, and hit intraday highs above $64 as physical demand overwhelmed their paper games. COMEX vaults are being drained at a record pace, with over 47 million ounces claimed in early December alone. That's more than 60% of registered inventory gone in days. This isn't speculation anymore. This is real delivery chaos erupting, forcing prices higher no matter how hard they try to cap it. The structural deficit is in its fifth straight year. Industrial buyers are panicking and investors are waking up. The era of manipulation is crashing down and silver is entering true price discovery. In this video, we're going to break it all down. The explosive price action, the bank's failed moves, the COMEX numbers that don't lie, the unstoppable demand drivers, the collapsing gold-silver ratio. Let's start with the price action because it's absolutely insane. Just a few days ago, on December 12th, spot silver hit an intraday high of $64.66 per ounce, the highest price in recorded history, surpassing even the peaks from 1980 and 2011 when adjusted for the frenzy back then. Sources like Light Finance and various market trackers confirm this spike, with some reporting up to 64.31 or 64.62, depending on the exact tick. Year to date, silver is up over 100%, in some calculations, as much as 114%, massively outperforming gold, which is only up around 60%. We've broken through every major barrier: $59, $60, $62, and now $64. The rally started accelerating after the Fed's latest rate cut, which weakened the dollar and lowered the opportunity cost of holding non-yielding assets like silver. But look at the charts. Daily and weekly candles show massive green surges, with volumes spiking as shorts get squeezed. There was a quick pullback to around $62 on profit taking and some dollar strength, but that's classic in bull markets. It's healthy consolidation before the next leg up. Remember, silver is known as the devil's metal for its volatility, but this time, the volatility is to the upside because the fundamentals are screaming higher. We've seen similar patterns before, but never with this kind of physical backing. In past rallies, paper dumping could cap it, not this time. The breakout above $60 was decisive, and the move to $64 happened in days. This is silver outperforming because it's not just a monetary play, it's an industrial necessity in a world going green and digital. Solar panels, EVs, AI data centers, they all need silver, and there's not enough to go around. This explosive week proves the rally is real and accelerating. The old highs are dust, and new records are being set almost daily. Now, let's talk about the elephant in the room, the bullion banks and their manipulation playbook. For decades, banks like JP Morgan, HSBC, and others have been accused, and in many cases proven guilty, of suppressing precious metals prices. Remember, JP Morgan paid a record $920 million fine back in 2020 for spoofing and manipulation in gold and silver markets from 2008 to 2016. Traders placed thousands of fake orders to deceive the market, driving prices down artificially so they could profit on the real trades. Fast forward to 2025, and reports are emerging that JP Morgan has dramatically flipped their position. They closed out a massive 200 million ounce paper short position and reportedly accumulated over 750 million ounces physically, the largest stockpile in the world. If true, this is the ultimate sign that even the biggest manipulator sees the writing on the wall. Their final desperate move this year was to flood the market with paper shorts every time silver approached key levels like 60. We've seen it before. Sudden slams in the New York morning session, spoofing to create false supply, naked shorts betting on caps. But this time, it backfired spectacularly. As silver broke $60, those shorts got margin called, forcing covering that fueled the surge higher. Why now? Because they can't fight the physical reality anymore. Past fines and scandals expose the game, regulators are watching closer, and the structural changes in demand are too powerful. JP Morgan's alleged hoard, adding millions of ounces recently, suggests they're positioning for the upside, not suppression. This was their kill switch, massive paper dumping to protect the fiat system by keeping silver cheap as an alternative money. But it failed. The move to 64 plus proves the market is breaking free. So why did their suppression fail this time? Simple. Physical silver tightness is overwhelming the paper market. For 5 consecutive years, the global silver market has been in structural deficit. According to the Silver Institute, 2025's shortfall is estimated at 117 to 149 million ounces, with cumulative deficits since 2021 approaching 820 million ounces. That's nearly a full year's mine production gone. Mine supply is stagnant around 813 million ounces, mostly as a byproduct of other metals, so higher prices don't quickly bring new supply online. Recycling helps a bit, but not enough. Meanwhile, demand is exploding from industrial uses that can't be substituted. Spiking lease rates, backwardation in futures curves, and exploding borrowing costs in London, all signals of genuine physical stress. This isn't speculative hype. It's real buyers needing metal now and willing to pay up. The bank's paper games rely on infinite fictional supply through futures. But when physical deliverers stand for delivery, the house of cards collapses. That's exactly what's happening. The physical squeeze is taking over, and no amount of spoofing can stop it. All right, everyone, buckle up. Because this is the smoking gun we've all been waiting for. The undeniable proof that the physical silver squeeze is in full swing and the bank's paper games are crumbling. I'm talking about the absolute chaos erupting on the COMEX right now in early December 2025. According to multiple market reports and direct CME data echoes, over 47.6 million ounces of silver were claimed for physical delivery in just the first 4 trading days of this month alone. That is more than 60% of the entire registered COMEX silver inventory, wiped out in a matter of days, an unprecedented depletion rate that is sending shockwaves through the market. Let me put this in perspective for you. Registered silver stocks, the metal that is actually warranted and available for immediate delivery against futures contracts, were hovering around certain levels heading into December. But this delivery tsunami has drained them at a pace never seen before. Analysts are calling it a vault drain emergency, with registered inventories plummeting to critical lows faster than anyone anticipated. COMEX is the heart of the paper silver market, where bullion banks have played their suppression games for decades, flooding the system with unlimited fictional supply through futures contracts. But when deliveries explode like this, it forces genuine 1,000-ounce bars out of approved vaults and into the hands of takers. This isn't some quiet rollover. This is aggressive standing for delivery by sophisticated players who know the physical market is tight and are refusing to roll over their contracts or accept cash settlements. The result? Vaults are emptying at a record pace, and shorts, many of them likely the big banks, are scrambling to source metal to fulfill obligations, which is directly fueling the price explosion we've seen to $64.66, all-time highs this week. And it's not just COMEX feeling the pain. The ripple effects are everywhere. Physical premiums on bars and coins have soared to multi-year highs, often plus $5 to 10 plus over spot, sometimes more for popular products. Dealers across the US, Europe, and Asia are reporting sold-out inventories, back orders stretching weeks or months, and allocation limits. Major mints like the US Mint have repeatedly suspended or rationed sales of American Silver Eagles this year, with reports of shortages hitting again amid this rally. Private refiners and wholesalers are struggling to keep up, with some quoting delays of 4-8 weeks for large orders. This vault drain is the direct, inevitable result of the ongoing physical squeeze. Buyers, industrial users, ETFs, institutions, and smart money are refusing to play the paper game anymore. They're demanding real delivery because they know the structural deficits are real. 5 straight years of market shortfalls, cumulative drain on above-ground stocks exceeding 800 million ounces, and no quick supply fix in sight. When registered stocks hit these lows, it creates a feedback loop. More deliveries beget higher prices trigger more standing for delivery, and shorts get margin called or forced to buy back at any cost. Look, we've seen big delivery months before, like the massive volumes in previous contracts this year, but nothing on this concentrated scale in such a short window. Over 7,000 plus contracts in a single day at peaks, equating to 35-37 million ounces demanded. That's not retail dabblers. That's heavy hitters testing the system and exposing the fragility of the paper overhang. JP Morgan's massive physical hoard, reportedly hundreds of millions of ounces, might be cushioning some of it, but even they can't stop the tide forever. This COMEX chaos is the clearest signal yet that we're transitioning from manipulated suppression to true price discovery driven by physical reality. The bank's final desperate moves, dumping paper to cap prices, have backfired spectacularly because there's not enough metal to go around when everyone wants it at once. Shorts are getting burned, vaults are echoing empty, and silver is responding the only way it can, blasting higher. Folks, if the banks of failed suppression was the match, then the unstoppable demand is the gasoline pouring on the silver fire. We're talking about a perfect storm of industrial consumption that is literally devouring every ounce of silver the world can produce, combined with investors, both retail and institutional, hoarding like there's no tomorrow. This isn't hype. This is hard fundamentals backed by the latest data from the Silver Institute and market reports as of December 2025. First, let's hit the industrial side because this is where silver shines, pun intended, as the irreplaceable conductor in the modern world. Global silver industrial demand is on track to remain at record levels around 700 million ounces in 2025, even after setting new highs in recent years. The Silver Institute's latest forecasts show industrial fabrication holding strong despite some thrifting in certain areas, driven overwhelmingly by the green energy revolution and tech boom. Look at solar photovoltaics. This sector alone is exploding. New N-type solar cells are doubling the silver usage per panel, and global installations are hitting all-time highs despite policy shifts in some countries. China and the EU are accelerating deployments, with photovoltaic silver demand surging as companies stockpile for 2026. We're talking hundreds of millions of ounces going into panels that can't be made without silver. There's no viable substitute that matches its conductivity. Then add electric vehicles. Every EV uses significantly more silver than a traditional car, up to 1 to 2 ounces per vehicle in wiring, batteries, and electronics. With EV sales continuing to climb globally, automotive silver demand is growing at a compound annual rate of over 3% through the next decade. Throw in AI data centers and power grid upgrades. These massive facilities require enormous amounts of silver for efficient power distribution, cooling systems, and high-performance electronics. Data centers for AI training are power-hungry beasts, and silver's superior thermal and electrical properties make it essential. Other electronics, smartphones, 5G infrastructure, medical devices, all add up. Industrial demand is price inelastic. These industries need silver no matter the cost because delaying production or using inferior alternatives is not an option. When prices rise, they don't cut back. They just pay up and pass costs on. This is why we've seen 5 straight years of structural market deficits, with 2025's shortfall estimated between 95 million to 149 million ounces, still massive historically, even if slightly lower than peak years. Cumulative deficits since 2021 are approaching 800 million ounces, draining above-ground stocks dry. Now layer on the investment hoarding, and it's game over for any suppression attempts. Silver-backed ETFs have seen massive inflows throughout 2025. Record pace with over 95 million ounces added in the first half alone, and more pouring in during November and December amid the rally. Global ETF holdings are nearing all-time highs around 1.13 billion ounces. This isn't paper speculation. Most major ETFs like SLV are physically backed, meaning real bars are being pulled off the market and locked in vaults, unavailable for industrial use. Retail panic buying is back in full force. Dealers worldwide report sold-out inventories, soaring premiums on coins and bars, often $5 10 plus over spot, and delivery delays stretching weeks. Mints like the US Mint have suspended or limited certain products multiple times this year. Investors are waking up to silver's dual role, industrial necessity plus monetary safe haven, and they're stacking physical aggressively. Institutions and even governments are quietly accumulating. Reports of central banks exploring silver reserves, massive institutional flows into ETFs, and hedge funds covering shorts all point to hoarding at every level. Physical access is tightening fast. Premiums are at multi-year highs. Vaults are draining, as we saw with that COMEX chaos. And the London market is showing extreme borrowing stress. This demand cocktail is irrepressible. Industry can't stop needing silver for the green tech transition, and investors won't stop hoarding amid economic uncertainty, inflation fears, and fiat distrust. Supply? Mine production is stagnant. Recycling helps, but not enough. The deficit persists, stocks dwindle, and prices have no choice but to go higher to ration what's left. One of the most exciting parts of this silver bull market is the gold-silver ratio crashing hard as silver outperforms. As of mid-December 2025, with silver around $62 after hitting 64 plus, the ratio has compressed sharply from highs above 90.1 earlier in the year to around 67.70.1 now, depending on exact prices, with silver's massive gains closing the gap fast. Historically, this ratio tells us when silver is undervalued or overvalued relative to gold. Over the long term, going back to 1900, the average hovers between 40.1 and 60.1 in modern times, with ancient biblical and fixed ratios at 15. 1. Extreme highs like 125.1 in past crises or 90 plus 1 this year scream silver is cheap. When the ratio peaks and starts falling, silver enters catch-up mode and often rockets higher percentage-wise than gold. Why is this happening now? Silver's industrial demand surge gives it extra torque during economic expansions or tech booms, while gold is pure monetary. In 2025, silver up over 100% YTD versus gold's touching 60% means the ratio is normalizing rapidly. Further compression to 50-60.1, or lower in a full mania, implies enormous upside for silver. For example, if gold holds steady and the ratio hits 50.1, silver could easily surpass $80 or $100. Partial reversion alone adds rocket fuel. This catch-up potential is just starting. Past cycles show silver outperforming dramatically when the ratio compresses from extremes. With deficits persisting and demand unstoppable, we are in the early innings of silver closing that gap big time, potentially leading to those 100-plus scenarios we've been teasing. So where does silver go from here? Short term, expect volatility. Classic for the devil's metal. The pullback from 64-plus highs to $62 is healthy profit-taking after an explosive run, but dips like this are prime buying opportunities in bull markets. Support around $60 should hold strong. A retest or break above 64 could quickly push to 70-plus as COMEX chaos resumes and year-end buying kicks in. Medium term into 2026, the setup is explosive. With ongoing deficits, record industrial offtake, ETF hoarding, and ratio compression, realistic targets are $75 or 100-plus, with some analysts calling higher in a full squeeze scenario. Fundamentals scream upside. No quick supply response, irrepressible demand, draining stocks. Risks? Sure. More bank desperation slams. Macro shocks strengthening the dollar or volatility scaring retail. But fundamentals always win long term. Pullbacks get bought, shorts get burned. The manipulation era is over. True price discovery means much higher prices to balance the market. Listen up. The banks have lost control. COMEX vaults are emptying. Demand is unstoppable, and silver is in full breakout mode. If you're not positioned in physical silver, you're missing the wealth protection opportunity of a generation. Stack real coins and bars now from reputable dealers, American Eagles, Maple Leafs, 100 O's bars. While premiums are high, but availability still exists. Avoid paper ETFs or futures traps that can get slammed. Own the metal outright. The window is closing. Shortages worsening, premiums soaring, governments, institutions hoarding quietly. This isn't fear-mongering. It's reality backed by the chaos we're seeing today. Smash that like, subscribe, turn on notifications. We're covering this daily as it unfolds. Comment below. How much silver are you stacking for 2026? Are you ready for the real breakout? Protect your wealth. Act now before physical becomes impossible to get at any price.